Well, hi folks, it's Sunday afternoon. Let's have a look at where we closed last week on some of these markets and where we're positioned. Let's start with Forex, and you can see last week the euro and the pound both came off against the US dollar. And here's the dollar index down in the bottom right here. And the dollar index actually picked up 2 days in a row now, breaking up through that resistance level. So the thing is, with interest rates coming down potentially faster in other countries than they do in the US, because the US economy is more resilient and apparently maybe has inflation better under control, other countries may cut earlier than the US, and we've already seen the Swiss National Bank cutting. We might see Australia cutting a little bit quicker than the US as well, for example. So I wouldn't be surprised if we see further dollar strength over the next number of months, and that would mean a weaker euro, weaker pound, Australian dollar, Canadian dollar, Swiss franc, etc. And the only exception to this might be the yen, with the Bank of Japan going the opposite direction, actually raising rates last week. So we'll have to see how we go there. We're short on the dollar yen, we're also short on the Swiss yen, and as you can see, that came off a lot, and the euro yen, as currencies weaken against the dollar except for the Japanese yen. So we're positioned short on dollar yen, also Swiss yen. That one's doing well, dollar yen just hovering around the tops for now. Right, going across the stocks, really there's not a lot to be said. The NASDAQ's been going more or less sideways for the most part of a month now, and S&P just sort of melting up higher. We're short on the NASDAQ and short on S&P. We actually sold S&P at the top of this rising wedge on Thursday, and Friday's move actually saw us go into a tiny bit of a profit, even though it's such a minuscule move. There's the rising wedge. It's a pretty clear pattern. It's a reversal pattern. It's pretty bearish. And I'd say about a 70% chance of this actually failing to the downside. Overall, I'm hoping for stocks to correct about 10 or 15% before bouncing and probably moving up again in the second part of the year. As was the case last week, a lot depends on the rhetoric and moves out of various central banks coming up in the weeks and months that lie ahead. And then also, of course, various elections around the world, specifically the US election coming up late in the year. How politics and central banks will intermingle during this next few months is going to be pretty interesting to watch. So we're short on NASDAQ and now short on S&P too, short on NVDA, and that might turn out to be one that has to be hedged again. And I'm also long on Apple and long on Tesla. Have a look at my last video on this and the live stream I did last week, where I talked about the reasons for being short NVIDIA but long Apple and Tesla. These long positions are both hedges against the shorts I've got on NASDAQ, S&P and NVIDIA, but they're also at areas on the chart where I think these begin to look attractive. So gold came off as I thought it might on Friday after that spike high on Thursday. We're right back at the central line of this channel. So my idea on gold's pretty simple. I'd like to either sell at the top of the channel or buy at the bottom, and I'm going to compress this so you can see it a little bit better. And I've got two green arrows and the question mark right in the middle, which is where we are currently trading. So we're either going to go to the top of the channel or to the bottom. If we get to the top, I'll look to sell back down towards the center line. If we get to the bottom, I'll look to buy up towards the top of the channel, not just the center line, but aiming for much higher. So generally I'm bullish on gold, and ideally we'll get a move to the bottom of the channel so I can buy down there for a move back up to the top. And if we get to the top first before a pullback, I'll be looking to sell for the pullback just down towards the center line and this previous resistance that we're trading at now. I don't have any trades on silver, and I don't intend to take any trades at the moment. I don't particularly like the way this chart's setting up. Right, going across to this page, some of our favorites. We've got uranium on the left here. I'm long URA and long UEC. You can see the arrows where we got into some of these trades. Those are going quite well. Cocoa, I'm looking to short at the top of this megaphone pattern, and actually we did react off there on Friday. Let me zoom in just a little bit and show you what happened, and I'll go to the 1 hour chart just to show you. You can see we reached the top of that megaphone. We made a little spike high, a bullish candle, and then a reversal, which is a dark cloud cover candle. Now, it's pointless looking at this on a 4 hour chart or a 1 hour chart, but it's interesting to see how we did react to the top of this megaphone. So there it is on the day chart. We're well above all of the moving averages, incredibly overbought. There's a lot of talk about cocoa right now. A lot of fear about both buying it and selling it. So any shorts at these levels are really up to you. And at the moment, there's no sign of this reversing dramatically. Perhaps next week, some people are talking about the eclipse today, I think it is. I'm not too sure. And people are saying there's going to be a big change in the markets. Maybe cocoa's part of that. Who knows? Before we get to natural gas, let's just talk about WTI. We're short from the top of the channel. That's doing okay so far. We've actually got a short position from a little lower down, so one there and one there. And if we can hold the high here from last week and move back down to the channel, that'll be our first target, and then maybe a breakdown through the bottom of the channel. And then natural gas. I've got two charts here. There's not a lot more to say than what I said last week, late last week. My broker's already rolled over into the May contract, so we're trading in the 1.8s or just thereabouts at the moment. And the Henry Hub only rolls over on Tuesday. As you can see, on Tuesday, we switched from the April contract to the May contract. We're still looking at the April contract here on Henry Hub. This is a crucial support level on the April contract, and we've bounced off there about 5 or 6 times now. Although this is becoming less important because we're trading the May contract, we'd like to see both of these hold really to sort of reinforce each other. And then just looking at the 4-hour chart on the May contract, as we've rolled over, we've just really pulled back into that rollover level, still holding above all of the 4-hour moving averages on this chart. And with a bit of luck, we might even gap up over the weekend. In a few hours' time, we'll find out, and move back up into some of these further supply zones and order block levels above us. I'm aiming for $2, $2.15, and maybe $2.40. Not sure if we'll get there on the first try though. And then finally, this page with the 10-year yield just moving down as we thought it might try the bottom of this channel and this support level. That seems to be what's going on. Whether that's going to keep moving down or not is doubtful. I don't know. Higher for longer seems to be the call from the Fed, although it's all a bit sort of mysterious at the moment, so we don't know. As far as ETH goes, I drew this chart. I put some comments up in the last video. You can have a look at that. Bitcoin, we're still long, and we held really well over the weekend. This is a Coinbase chart, so it's live, and you can see we formed a hanging man on Saturday. This is Sunday's trading, this current candle. Looking pretty strong, pretty good. We want to get above this 20-day moving average and previous resistance. Hold above there. I'll be looking to add some more to this long trade. And also on a close above the recent high at about 73.7. And then I'm looking for a move up into the 80s and the 90s. I'm willing to add to Bitcoin all the way down to just below 50,000. And if we can manage to hold that level, I'm pretty bullish. If that level fails, I'll be a bit worried about it. Have a great Sunday evening or afternoon or morning, wherever you are in the world, and I'll speak to you next week. Take care. If you haven't subscribed to this channel, take the moment to do so now, and I'll see you in the next video.